Hello and welcome to our new episode of our crypto trading crash course. On today's episode, we want to talk about two of the most used terms out there when it comes to trading: going long or going short. In a nutshell, those two are actually very easy to translate, because going long just means I am buying a certain asset, going short meaning I'm selling a certain asset. So if you, for example, are flat at the moment, flat meaning that you don't have a position, and you say I'm going long Bitcoin, it means I'm buying Bitcoin, just as I did in this example here right now. If I say I'm going short Bitcoin, on the contrary, it means I'm selling Bitcoin like I did here just now. Now you could ask yourself, of course, why don't we just use buying and selling? Why do we use going long and short? And there are really two answers to that. Because in trading we need to be very precise about what we are doing. And going short, for example, means I right now do not have a position, but I want to sell a position because I want to speculate on falling prices in the hopes that I can buy back this position later again. If I just would say I'm selling a position, it also could mean, I've in the past already bought, for example, Bitcoin, and now I want to sell the Bitcoin. The person I'm talking to could not know if I'm either flat, so I've just sold a position that I already had opened before, or if I'm right now minus Bitcoin, meaning if I'm shorting Bitcoin, if I'm speculating on falling prices right now. On contrary, if I, for example, tell you I'm shorting Bitcoin, you exactly know that, Dirk doesn't have an open position right now in Bitcoin and he's selling it to speculate on falling prices. If we look in the past, it's actually not that easy to determine when those terms were used first. One of the first mentions I could find is in the June 1852 issue of the so-called Merchants magazine, where one of the writers is complaining about so-called short selling, meaning people selling stocks that they do not have yet, thus being short or lagging the stock. So in summary, actually two terms that are very important but also very easy to understand. If you are long an asset, means you are buying an asset that you do not have yet. If you are shorting an asset, for example a cryptocurrency, means you are selling a cryptocurrency you do not have yet because you want to speculate on falling prices. So next time you stumble upon those terms, you exactly know what traders are talking about.